Hello everyone. Yeah, morning is Hillary once again. Basically, I thought I should drop and be serious about my YouTube journey. Understand creating of videos and explanations and signals, trying to drop signals for you all on the YouTube channel, so you can also pick from it and then utilize it. So, basically, I believe you all know about volatility then and the volatility market. Now, I'll basically tell you that we've gotten to the level where we've tried to simplify and reduce the number of pairs we're trading. Not as if we would not be looking at other pairs, but we'll basically be looking at these pairs, the volatility 10, the volatility 25, and the volatility 50. Reason being that these are pairs that at least their movements are straightforward and they are also slow pairs, a kind of. So with that, one is able to manage his risks, not losing much money and also being profitable. So now looking at this chart, first thing we can do is we'll come here, we can reduce the chart, try to make it very small. Now we are trying to make it very small so we can see a bigger picture of what is going on. Now, using that, you would agree with me that we have this as a resistance level that has been touched several times. You can see market touched it here first time, second touch which created a double top, and then another touch here. So that's already telling us that okay, if we are in this market, we would be looking for a sell. So now that being the case, we are looking for a sell. Now the sell on long term, expect to hold that sell up to this area. You understand? So we expect to hold the sell up to this low. But then the nearest zone we'll be looking to at least hold our sell to is this area here, which is a very okay area. Now, having done that, remember you guys remember we do talk about our fixing of order block. So now, not normally, if you're one of my students, you understand that I tell you that we fix our order block using the last consecutive candlestick from the first resistance. So this is the first resistance. We mark our order block using the last consecutive candlestick. That still holds. Now we mark our order block off the higher time frame. Good. Now we also do another thing by marking our order block the second resistance we have, which is like the lower low, the higher low, sorry. We mark our order block. Now you can see that among this first order block we mark and the second order block, a confirmation we pick to make our entry using order block is having getting a candlestick close below our order block. That tells us that okay, that level or that zone is validated for an entry, whether short entry, that is whether you'll be looking to take profits quick or long, but that validates that we can make our entry for at that level. Now, since that's the case, we can see that this area has not been mitigated or has not been respected. Let's not use mitigated because mitigated may get you things confused. So this area here, which is the top area, has not been respected. So what do we do? Rule it out. Now this area which has been respected, we want to now understand what is going on. Now you would agree with me that we have what we call our liquidity grab, yes, and then we have what we call our break of market structure here, you get. So now, why do we mark all this? We mark all this in order to add up confluences to be able to say okay, this is what are these are the things we are seeing, to give us confidence that we can take a trade for a trade at any point we are picking reactions from. Now, one other thing we do is we can now look at this area. We'll be looking to pick our confirmation from this area. So we can now confidently go to the lower time frame. So now, having gotten to the lower time frame, one thing we basically can do is to reduce the to pick a lower time frame. So now we have break of market structure coming out at this area. Now there's something also we could do here, you understand? So now another thing we could do is to fix our order block. So now you can see that when we fix our order block, we adjust it to lower time frame. We have markets doing what? We have markets slightly respecting this area. Now there is a hidden base at this area that we could use to make markets react. So now we get a base. How do we get a base? We get a base from a push up, drop, and push up. Now, when you see this market pushing up, dropping, and pushing up, this area from this zone to this low here is considered as a base. So we always, anytime market drops below it, we want to see market come into that area and respect it for us to take an action. So that is the hidden base. So this one here, we have it at this point. The other block still got respected, but the base now also is a nice zone. So that's this. We have a push up, a base, and another push up. Now, having gotten that normally, I can see that that was where market reacted from off from really well, or pretty nice. The other block on higher time frame still held. So now this is what we call our top down analysis. So now, having done all this, what do we do? We can now come down to the lower time frame. But even before coming down to the lower time frame, you would understand that we can come down here and mark our trend line. So having marked our trend line, the normal rule, you get your break of candlestick, retest, you enter, or break of candlestick, you enter your trade. So now that was what we have here. Now got the break of trend line, retest here, entered our trade, and then we're selling. But now that's not even the point. The point is, how would we have entered at this point? Now we'll go to the lower time frame. I haven't gone to the lower time frame. You can see the market pushed up, created a base, and then pushed up. So now on the lower time frame, this is 1 hour. So we can now go to 15 minutes time frame. What do we want to do? We want to mark that base. So we want to mark that base. Now we want to mark the base. So now this is the base here. This area, this area. Now this thing I'm teaching is things that some persons will pay for, but I'm just in my own way teaching it, and just it will help a lot of persons to be profitable. To help a lot of persons struggling to be profitable even in my absence. So now, after having creating your base, you can see that okay, we have this confidence that okay, market is reacting with our order block, or reacting with our hidden base or higher time frame, reacting with the daily order block, reacting with all of those zones, reacting with some persons who say double top levels and all of that. Very good. So now we are looking for our confirmation. We now mark our base, push up, drop, push up. That's rally base, rally. Now we mark our base out, and then we want to see market close below our base. So once market closes with a candlestick below our base, this will be your entry. This will be your entry, and then you put your stop loss above here. Now, using this one, you see we've gotten down to 15 minutes time frame. Using this strategy, you would rarely be in losses, but at the same time, you must you must you must make use of risk management. You won't go and just over leverage. You must make use of good risk management because of the space of entry to stop loss. Now, I will still get to explain how you can use good little lot sizes, open lot sizes, and trades and all of that. I'll get to explain all of that. But for but till then, we'll get a close here and we'll pick our sell. Market pushes up. We You can see okay, it just reacted here, but didn't break our resistance level, and then close again below. If you are like an aggressive trader, you can pick your entry, you can sell here, and then put your stop loss at this previous resistance. That is having a tighter stop loss on second entry, and you can leave the trade to run. So now, did we did we make profits? That's the question. So did we make profits? You can see how the market played out. So if we had entered at that point, we'll be holding our trade up to this point. That is enough pips. Enough pips. Okay, now let's check. So let's check. So if we had entered around here or around here, okay, let's so if we had entered around the close of this candlestick on 15 minutes time frame, so we would have made a total of 116 pips. Now 116 pips is not a joke, you get. So we would have made a total of 116 pips. So this was where the trade ended. And within this move from here to here, there were a lot of re-entries one could have made in the market. Now, I would not really be talking about the re-entries now because I have other pairs I would like us to look at. So now that was for that. Now, after this happened, I would have to clean this up so that you can see what I'm trying to educate you on better. It's not for the this is not for the case of design. Now, I think this is V10. I'm on this trade. Now, after that, we pushed it to the lower time frame. That was how we made our entry here and then held up to this point. Now, at this point, we also made our entry here based on this retest and all of that, but saw rejections that made us to buy. But now, I'm not really going to talk about the buy because I just want to talk about the sell pressure. We can see that this market, what we should be looking out for is selling pressure. So if you are taking buys on this market, then you should be taking your buys with lower positions, like lower lot sizes. Now we come here, we have this other block sitting here. Now having had this other block sitting here, what do? We go to the lower time frame. Now you can see the same thing we explained there on that time frame. We had what? We had our other block marked. So upon the close of the candlestick of your um, other block, it showed the bearish engulfing candlestick. That is confirmation number one. And then we could also come down here, refine it to lower time frame to make our entry and then take our first profit of this trade at this point. Then let other trades run. But then let us look at something. I still talked about the base. We have rally, base, rally. Now, not really pushing above here, but that same thing. So we still had Now all of these are just they are for me confluences. You understand? To help you make good decisions in the market. To help you make good decisions in the market. So now then we go to the lower time frame. Now getting to the lower time frame, you can see we have a rally base, rally too. Very good. So what do we do at our zone of confluence? What do? We mark the base. After marking it, what do? We are now looking for our entry. We are now what? Looking for our entry. So then what do? At the close of this candlestick here, we pick our sell, put our stop loss here, and that is our first entry. And that entry is our risky entry. The less riskier entry is when you get your second close below it. So you have a break, retest into that zone, second close, close below it, and then you can pick your sell. Most times that sell will really drag you not beyond this area. So you can put your stop loss here or then put your stop loss here. So any which way it's okay for you. And then you just forget about the trade, you go and sleep because the trade is just going to run into profits. You are risking very little to make more. Now, how many pips are we talking about here? We are talking about how many pips are we talking about? So here, yeah, so I want to make it a little bit exact because I'll be making my entry at the close of this candlestick here. Okay, good. So we basically will be making about 89 pips. So with this strategy, it's helping things get easier or get easy for a lot of you traders. It's helping your entries become or helping you get a better entry. Now we have the next phase, which is the 4 hours time frame. We've already anticipated that we are looking for more of a selling position or selling pressure. Now, what are we looking for here? We basically take this market bit by bit. Now, we already know that. Now, on this particular pair, what you'll be looking for in days to come is you will be looking for more of selling positions or selling pressure. So, these blue lines have marked take profit levels you'll be expecting the market to get to. But then how do you make your entry or how would you make your entry off these take profit levels you're expecting the market to get to? Watch how market plays around here. Now, one thing I've discovered over time is the volatility markets, they move faster or they move with more volume at night time, which is from ranging 8 o'clock, 7:30 up to 4, 5 o'clock. They move with volume. Now you can see that this was um, the move between the last between 8 o'clock yesterday up to now. You can see the volume. So you can see at night are when they have the market moves with volume, and during the day for timing, you get market moves with lesser volume. So now that being the case, you just see how it goes, and then what you can do is you can basically mark this zone out. This is a support zone. It helped us to buy here. It helped us to say pick a buy here. Now what do? We would now want to pick this support zone as our conference level. So this conference level is this. We want to see market break below here and then break into the zone, rejecting it, and then break back into the zone. And we can basically refine it to our 5 minutes time frame, take our sell and hold to this TP. And you can look at how markets react. If it reacts well in your favor, you hold to this space and then relax again to watch how markets would play. So guys, that is our analysis for the volatility 10 index. Now let's move over to the volatility 50 index. Now on the volatility 50 index, the first thing we check or the first thing I had to check was How to check the trend? I looked at the trend and I was like, okay, um, not looking bad. You get, we are on a downtrend. Considering the market from this high, which is like the highest high, the highest point market has ever gotten to, and then considering these lows, so considering these lows. So now what we can see categorically is that market has been moving between the trend and creating a downtrend basically. So because we know that market is on a downtrend, we can now go to the lower time frame to amplify our trade. Now we count it by a little bit. We do a little bit of counting or a little bit of reasonable structural lookings. So now we found out that market gave us a clean break of structure at this point, and then after giving us a clean break of structure at this point, at this area here, market also gave a clean break of structure at this point. But after giving that break of structure, we also agree to the fact that market also gave us this other block. Because it's on a 24 hours time frame, we would not go deep into trying to see why it reacted and all of that. No. So another thing we saw was market dropped, created a base and continues to drop. So now that base is very significant. And the base is also at the line of the break. So what do? We marked the base out. So having marked the base out, we now knew what we were expecting. Now we're expecting markets to either break this and come into this zone, or maybe this zone, or reject this zone and drop to this area. You understand? So that is what we basically are expecting. Now, from both me and a lot of other traders I work with, we've discovered that in all market pairs, including the crypto market, synthetic indices market, stock market, and everything, it is easier for the market to fall, that is drop. Market always drops faster than ascending. You can also see it on the chart here. Market's able to drop faster than ascending. Yes, we can see that this was a nice push up, very good. But at the same time, market drops faster than pushing up. Now, having got this, what do? We come to the lower time frame. Now, when we get to the lower time frame, we do some markups. We do some markups. So we could come into the zone and try to create something inside to pick out a base inside this area, a push within the push up. But now we can't see anything. One thing we can see clearly is another block. But then that just tells me something. It passes a message to me that okay, that is a zone I want to see market react. So now based on that, we marked our other block initially from this area. We marked our other block initially from this area. That helped us with a buy. Now when you mark your other block, one thing you must do is to go to the lower time frame and look for an extra confluence to help you make an entry. So you must go to lower time frames to look for an extra confluence to help you make an entry. That now gets everything solved. Now, having done that, we got our entry, and I will not want to explain much on that. Now, initially we were having rejections from especially this reversal candlestick. Now that helped us to sell. But at the end of the day, we saw that this other block we got a confirmation for a buy. We just had to take the buy and it slashed through this area, got into this area, started giving rejections. Now, another thing to add is anytime you are trading and you see markets dropping weeks rejections from a particular zone, you just have to know that something is going on there and you must work with market structure. So now, what can we see? We can see that inside this area here, market broke structure. So we can see that inside this area, market broke structure. Now, having broke structure, market also did another very funny thing. It broke it broke it to the upside. But how do you now validate what happens here when market broke it to the upside? You watch it carefully. You understand? You watch the market carefully. Since it broke it to the upside, what did you now see? We saw that markets, while rejecting, still came down again and broke the structure. That now tells us something very clear that okay, market is actually changing direction. You understand? That tells us that market is actually changing direction. So now, if you're able to pick something off this area and sell, maybe from this base and sell, that was just a very short trade. But then after market broke the structure, what did I do? I simply waited for market to reverse into this zone, even if I took scalps, and then we picked our sell from around here. So now how would we make our sell? We have what we call rally base drop or rally base rally with a just little candlestick, or you can still fathom it with your other block. So having gotten so close, I won't change. I would love to remove this zone so that it will get clearer. So now, having done that, we use this zone. Now, what zone am I marking? I'm marking this other block. So we use this other block here to pick our entry. So now, having marked this area, another thing we'll do again is you've seen that market has created a lot of support here, support. So what do? We connect all of them together because what we are doing is we are trying to give ourselves reasons with our idea of analysis for us to be able to take an action on the market for either a sell or for a buy. Now, based on the other block, we took our sell. I took myself basically at the close of all this candlestick here. I don't know which candlestick, but I know I took myself at the close of this candlestick. This is our entry confirmation, close of this candlestick, and you pick yourself. You get, but now this is actually what I did. After seeing this rejection into this place, I had to go to the lower time frame. I took my entry from my 5 minutes time frame though. So I had to go to the lower time frame. And then I needed to see something. Now I saw that market rallied up, created at my base and pushed up again. So now I did something. I marked this area as my base. So I marked this area as my base. You can see that when market pushed up for my base, didn't hit the stop loss above, and did not even give us our entry at this area for a trade. But then just close below the base, and just from there it has been selling. So if you are taking your sell trade at the close of this candlestick here and then put your stop loss here or here with good risk management, you've been in profit. You would have been in profit. But then your first take profit would be this low. So now, having held your take profit at that low, what do you do? This is our short. We pick our entry here, put our stop loss at this point, then take profit. So basically we are making like um 1:2.5 risk to reward ratio. Don't know if it's called like that, but at least 1:2.5 risk to reward ratio, because what we are risking basically, we are making 2 is 22, and we're making 20 our pips. We're risking 22 pips to make 51 pips. So you get the math there. So now this is it for a quick exit. But then if you go to the higher time frame, let's say the 4 hours time frame, you remember that this is what we are saying. So if you are able to hold this trade, sorry for this, if you are able to hold this trade, you know that we are looking at taking profit at this low. So it's just a thing of entering and holding it and then allowing things to play down. And then if you look at this is like a rally based drop. Market rallies back to that side and the nice sell. So this is one area to really take profit. So then that is all for that volatility 25. I will try to be dropping updates on my view of the market and the reactions we get from the market. So we are able to be guided. That is basically for those who want to be taking my trade ideas and everything on these pairs. Then if you have any pair you would love us to analyze, you can drop it on the comment section, and my next video will be about analyzing this video. Please do well to subscribe and like this video if you are getting any value from it. Now we get to the last pair we'll be analyzing for today. Now what do we do? Same thing. On the higher time frame, reduce it to the lowest time frame. We make it small. Now we can see that we are operating on a range. Good. So now we operating on a range, one thing you can do is we can basically mark this area of resistance. Market taps here several times, and we are good. Now market has broken through this area, so we are having markets fighting around here, or we can say around this low, and then all these other places. So because this is daily time frame, let's get to understand what market will be doing around this zone and this zone. So now having got that, what do we do? We would be going to the higher time frame. We'll be zooming it out. So now we have this base here. This is another block. Push up. Other block, two consecutive candlestick at a resistance point. And this is one significant resistance point among all of this resistance. So now what do? We basically came here and we marked out this other block. So now this is a nice entry. If you There's still opportunity for you to pick more sales on this trade and still be massively profitable. So now we marked our other block and then we checked the other time frames. We saw that okay, here market reacted into it, dropped, reacted into it, and dropped again. But then we can see that okay, here we have market create a rally base rally, and also here rally base rally. So now let's see what happens here. So for this, we'll adjust it to this low. Then, because basically the nearest low we're expecting market to get to is this one. So we have rally base rally as we said. But now let's go to lower time frame so that we can see the market in a clearer face. So this is what happens. Market always pitches different market always brings itself to you in different ways. Now we can see that in this rally base rally we have this base rally. So let's mark it out and see what happened. So having marked this base out, you can see that market has not respected it. You get, and then we can see that the base I actually expected market to respect was not even this base. So for me, this is just like a stop point. Though this is giving what do you call it? Um, what candlestick pattern is this again? Hanging man. Now rejection candlestick. Now that's not the base I expected market to come off. Why? Because I saw that Market had already came here, come to this point and created another low. Sorry, I just have to mark this one so that we know that this is one of the nearest take profit levels also we'll be looking out for. So now if you want to partake of this trade, you'll be looking for a sell entry. Now after doing that, we got here and we saw that market has already broken this area. So that is our second entry. Our first entry was to take our trade ourselves from this place and then put stop loss here and we would have been in profit. Now, if you're waiting for a retest, well, you'll be wanting this market to get into it, but it hasn't gotten into it. So at the second zone, we saw a break of market structure. So that validates the fact that we're looking for a selling pressure. But now, after doing that, I saw a base, a rally base rally. So what did I do earlier on? Actually, um, market hit my stop loss out today, this morning. So I entered with a reasonable lot size and then I placed my trade around here. So I was basically holding this, putting my stop loss here and then holding market to move in my direction. But I could see that what happened was market just went slashed my stop loss out and then it has come back into my zone and as we expected it. So what will I be doing? I'll be looking out for another entry around here. So this could be my rally base rally. Then I'll mark this zone out. I want to pick my trade upon the close of this zone. So now what do? We come to lower time frame. Yeah, so having got to lower time frame, we can see something clearer. We can see that we had the last rally, base and rally. So then what do? One very simple thing is this. This is free money. You come here, mark this base out. It has closed below it. Yes, a lot of persons would have made their entry, their sell here, and you can take your sell there if you wish and put your stop loss here, knowing that market will only react within the zone and sell off. Then one other thing I can do is another thing again you do is all these are just confluences adding to your confluence. So we can come here, we can come here, mark our trend line, and then here as we expect the trend line break that aside, we go to the lower time frame, which is our 5 minutes time frame. So basically, I think all the pairs today we are basically seeing selling pressures on all pairs. So we mark our trend line. Now the trend line is just to give us a guide. It's not like we are making our entry of the trend line, but it's just to help us know that okay, this is what we are looking out for. So it helps to strengthen our confidence level. Yeah, so based on this, we already know what we are looking out for. We want to see markets come down. So let me use my tool. We want to see markets come down. It has already done that. Either we say okay, we want to see market has broken here, so we could have made our entry at this point at the close of the candlestick here. But we want to see something like this, maybe break into this area, and then we'll take our sell. So that's it, guys. That's it, guys. I'll leave that like that. So guys, I'll just take a screen capture of this. I'll post it on it and let's see our after. So this is like our before, and then let's say we take our screen capture. Yeah, so let's say we take our screen capture for this first. Oh, sorry. So let's say we take our screen capture for this. So let's say we'll take our screen capture for this and we'll watch how markets react. I'll take our screen capture for this. Okay, this one actually played out nice. So we'll still watch how markets react. We are looking for, we want market to sell. We'll take our screen capture for this also. So that's it, guys. That's it, guys. Thank you. Thank you for your time. I know this video is a little bit long, but I'm trying to pass out or give out value there. So you just bear with me. Peace out, guys. One love.